There are several different ways that you can finance flipping a house. I'm going to go through the 4 most common with you, and I'm going to go through them in order of most expensive way to finance to the least expensive way. The first method is through private financing. Now this is your most flexible type of financing because you're dealing with a private lender and not a regulated lending institution. With private financing, your rates and your terms can vary dramatically depending on who you're borrowing the money from. And they usually will give you a more flexible term, as well as allow you to make interest-only payments, which will help reduce your carrying costs while you're doing the flip. Now, private financing is going to charge you a lot higher of an interest rate. It's very common for us to see rates between 8 to 12%. You're also going to see an upfront fee of usually between 2 to 5% for structuring the loan. The next form of financing is to use a B lender or alternative lender, and there are several of them in Ontario who do have specific products just for people who are flipping houses. Now the great thing about these products is they're usually an open term mortgage, which means that you can close it off at any time you want without any penalty. You will usually see lower interest than private financing, but still higher than your conventional mortgage. And your payments are going to have to be a combination of both principal and interest. These lenders will usually lend you anywhere between 75 to 80% of the value of the home that you're purchasing, depending on your situation. And the rates can vary, starting from as low as 5.99%, and there's usually an initial startup fee as well of about 2 to 4%, again depending on what your specific situation is and the house that you're purchasing. The third option is to go with a conventional or a traditional mortgage. For this mortgage, you're going to have a lot lower interest rates and your setup fees will be minimal. However, this can be a more challenging mortgage for a flipper to get because there's a lot more red tape involved in getting one of these loans. If you don't have great credit, or if you're already fairly leveraged, which a lot of flippers are, you likely won't be able to get one of these mortgages. Now the fourth method is to go for a HELOC, so a home equity line of credit. And this is by far the cheapest and simplest way to finance a flip. Basically what you're doing is you're taking a line of credit against equity that you already have in an existing property. Your rates are going to be lower, you're going to be able to make interest-only payments, and you can pay off the loan at any point without a penalty. Now, however, obviously to get one of these, you have to already have a substantial amount of equity in a property that you own. Lastly, you can always forego financing and just pay with cash. However, this isn't the most efficient way for you to leverage your money. If you've got that much capital, you could be doing multiple flips at a time and making a much larger profit. If you have any questions about financing a flip, please contact us at the Go Wild team, and we'd be able to answer any questions you have or connect you with an excellent broker who specializes in flips.